This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC on Monday raised its world oil demand forecast for the first quarter of 2022 and stuck to its timeline for a return to pre-pandemic levels of oil use, saying the Omicron coronavirus variant would have a mild and brief impact. The upbeat view from the Organization of the Petroleum Exporting Countries comes as oil prices have recovered some of the slide seen when the variant emerged last month. Still, the World Health Organization says Omicron poses a very high global risk. In a monthly report, OPEC said it expects world oil demand to average 99.13 million barrels per day, BPD, in the first quarter of 2022, up 1.11 million barrels of oil per day from its forecast last month.
The European Commission will propose a system for EU countries to voluntarily jointly buy gas to form strategic reserves of the fuel, a measure drawn up in response to soaring energy prices, according to a document shared with countries ahead of a summit this week. European gas prices surged to record highs in October amid tight supplies and high demand from global economies recovering from the COVID-19 pandemic. Prices have retreated from those peaks but crept back up in recent weeks amid cold winter weather and lower than expected imports from Russia. Soaring energy prices have left governments scrambling to use subsidies and tax breaks to shield consumers from high bills, and prompted calls from some countries for an EU system of joint gas buying.
Moving on to the top news in the energy sector.
U.S. energy companies are pressing states to speed development of low-carbon fuel markets, warning that numerous proposed projects to make renewable natural gas and other biofuels may fizzle. State programs, led by California's Low Carbon Fuel Standard, LCFS, reward fuel producers for decarbonizing by producing renewable fuels, who have responded by ramping up the production of such greener supply. As a result, the price of credits that refiners and other polluters can generate has dropped sharply, thereby making it less likely that companies will invest in more production facilities in coming years.
China will loosen blanket restrictions on energy consumption in order to ensure environmental and climate targets do not erode future economic growth, according to a policy document issued after an agenda-setting meeting of the country's top leaders. The country will also move towards capping carbon dioxide emissions from overall energy use to meet its environmental goals, rather than setting energy consumption targets, said the statement issued late Friday after the annual Central Economic Work Conference. China, the world's biggest coal consumer and greenhouse gas emitter, has set rigorous national and regional targets for total energy consumption use and energy intensity, the amount of energy consumed per unit of economic growth. Next, we have the top news in metal markets. Chinese ferrous futures closed higher on Monday, with the benchmark iron ore contract rising nearly 6% at one point after two sessions of losses, as a pledge by the government to focus on economic stability next year bolstered demand outlook. China pledged to continue its prudent monetary policy and proactive fiscal policy, and to prioritize economic stability in 2022, according to the annual Central Economic Work Conference last week. The supply side of iron ore is not expected to see a big change next year, with shipments from mainstream miners to remain stable while output from domestic mines will see little change, said Cheng Peng, an analyst with Sino Steel Futures.
Indonesia tin exports are expected to be around 70,000 tons in 2021, Reza Andriansyah, vice chairman of Indonesia's Tin Exporters Association, told a virtual conference on Monday. The figure is 7.4% higher than tin shipments last year, which stood at 65,150 tons.
We will now look at the top news in the agricultural sector.
Chicago wheat futures fell on Monday, as expectations of larger than expected world supplies pressured prices. Corn and soybeans also fell, facing technical resistance as dealers waited for new indications of Chinese import demand for U.S. supplies. Chicago Board of Trade most active wheat had fallen 0.9% to $7.77 minus 1/2 a bushel by 12:28 GMT. Corn fell 0.5% to $5.86 minus 3/4 a bushel, Soybeans fell 0.7% to $12.58 minus 1/2 a bushel. The U.S. Department of Agriculture, USDA, last week raised its global wheat ending stocks view with improved production outlooks for Australia, Russia and Canada. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.